Welcome everyone to the 5th Local Climate Solutions for Africa Virtual Congress, the first session of week 2. And what a session, or what a week last week was. Currently we're going to be posting the link for highlights from last week in the chat. So please do go and look if you missed out on any sessions, because it really was a wonderful week. And we are excited to be kicking off week 2 with the session that we are currently in. So LOCS4Africa is being implemented by ICLEI Africa. And ICLEI, if you do not know, is a global network of more than 1,750 local and regional governments committed to helping sustainable urban development. So currently, we're active in over 100 countries and have over 300 experts working in 22 offices worldwide. So without further ado, for the session, I'd like to introduce our moderator, Mr. Omar Salah, who's the Acting Director of the Regional Office for Africa, United Nations Human Settlements Program, or UN Habitat. So we are honored to have UN Habitat moderate the session, and so over to you, Mr. Salah.
Thank you very much, GS, Excellencies, friends, colleagues, ladies and gentlemen. It's a pleasure for being, given this task of moderating the first session of this forum, on local climate solution for Africa. So to introduce myself, Umar Salah, I've been working for UN Habitat for now 10 years, and now I'm heading the regional for Africa, and looking into closely the issue of climate change, which is giving you an idea on how important it is, this topic for us, and being able as well to work, jointly with ICLEI, the city of Kigali, and the local, climate solution for Africa Congress, and would like to congratulate all actors involved in this very highly and very prominent and timely process for this Congress in Africa. So, as you may know it already, this session is part of the Urban Natural Asset for Africa program, which is being implemented by ICLEI Africa and ICLEI Cities Biodiversity Centers, and funded by Swede Bio. As such, the session was made financially possible by Swede Bio and ICLEI CBC. I would like also to express my appreciation on behalf of UN Habitat to the co-host of this session, our colleague of the United Nations for Disaster Risk Reduction as well. I would like as well to welcome distinguished speakers and all of you who are joining us as participants for the next 90 minutes, and we look forward to your contribution. As you may know it, the topic we are looking into, which is about demystifying finance for disaster risk reduction, is extremely timely, as this discussion comes at the moment when Africa is threatened by a serious multi-hazard scenario. As you may know, the continent is highly susceptible to the impact of climate change and extreme weather condition, a situation which is now being intensified by the wide-ranging health and socioeconomic ramification and the COVID-19 pandemic. In cities, the urban poor and people living in informal settlement are affected most severely by the impact of both climate change and the coronavirus. The figures we are seeing today is that 54% of urban dwellers live in informal settlement in Sub-Saharan Africa, and they are all facing this risk of shock, from this disaster and climate change overall. Cities are key in the fight against climate change. That's something we all know. Cities as well greatly contribute to and suffer from the effect of climate change. And we have a lot of experience over the last 5 years in Africa, from southern part, from western part. But at the same time, cities hold high concentration of people, and people have innovation ideas and skills which can be harnessed to support a transformational and green recovery from the pandemic. We have an opportunity that we can tap in to come up with innovation and how best we can support the cities. And we see local authority playing a key role in this fight against pandemic, and now in this phase of recovery. Their role and their thinking are critical to reach a very integrated approach to recovery. And when it comes to recovery, we must be powered by the continent's abundant clean energy, and that lead to the creation of great jobs and increased trade. And this will be linked, of course, to technology as well. So you know that UN Habitat has been very active on this area of climate change and building resilience for cities. And the way we have been doing it is looking into bringing participatory planning tool. We developed this city RAP tool, but also providing capacity building for local government and including resilience into national urban policy in African cities to make sure municipalities work with stakeholders and local communities to identify their most pressing urban resilience challenges and solutions and turn them into bankable projects that draws investment. So that issue related to financing of disaster risk reduction is key now in this current discussion, because we are facing a very complex environment, globally speaking, with the dwindling of resources, but also the increase of need. Another point we need to take into consideration when it comes to financing is looking into collateral aspect as well, especially when it comes to disaster, where citizens have been hit, most of the time by their property, and how we can help them get, a smooth recovery, which means that building partnership, private-public partnership to attract a diversity of funding mechanism is very key. And that's the reason why this discussion is very important. What are the different models of fundings we can tap in to fill this gap of funding in terms of recovery, but also of prevention of the disaster risk reduction? And on that, private sector has a key role to play. I think the point we want to discuss today, the importance of insurance company is very important in diversifying the mechanism for financing, this disaster risk reduction, and broadly the climate change element. We have a lot of model, but what work for Africa? That's the question we need to discuss. So today's session will look into innovative insurance product for improved risk, disaster, and climate in cities that must be embedded in a post-COVID economy recovery. It will provide also the space for a balanced dialogue around the potential for insurance and recognition of some of the limit and unknown, and shared lesson from leading African DRR-finance projects. So today we have a variety of speakers who are going to share their perspective on this issue of insurance and broadly on finance. But also I have to mention that this session is part of the Urban Natural Asset for African program, which itself is an example of cutting-edge programs that use nature-based solutions to build disaster risk preparedness in 8 African countries. So this is just, the background of this conversation. Hopefully it means something for you. And there's some logistical issue and technical consideration I want to share with you. And I'm sure you can see it, on the screen already. You have a translation in French, English, and Portuguese available, but also all attendees can access to simultaneous translation. But you can post your question in the chat, because it may be not possible for you to interact directly with the panel members, but at least you can, share your question, concern, and recommendation through the chat. So you have any question? I already mentioned that. So we'll be monitored by someone, this chat. And if anyone has a technical difficulty, please contact the help desk on the platform, which is accessible. The session will be recorded. If someone has some issues on the recording, let us know, and we'll be sharing later on. Once again, an important reminder, please type your question in the Q&A box. We will try our best to make time for a live Q&A session, but if time does not allow, then all answers will be typed back in the Q&A. So again, some information of the panel members. Myself, Umar, I'm here, acting director of the regional for Africa. Thank you for the nice picture. And as well, we have Mr. Amjad Abashar, who is the chief of the UN Office for Disaster Risk Reduction for Regional for Africa. We'll have Ms. Mia Tom, technical director on Senfree. We'll have as well, she will be followed by Leslie Nolon, the CEO of Chief Executive Officer, African Risk Capacity. After we have Mr. Gerard Jositz, Principal Underwriting on Alliance. And lastly, we'll have Lieutenant Colonel Fali Arichana Fabian, Project Coordinator of the National Disaster Risk Management Office in Madagascar. And lastly, we'll have Mr. Jörg Wilbrink, Forecast-Based Finance Advisor, International Federation of the Red Cross. I hope I pronounced very well the name of people. I mean, without further ado, we'll call upon the first speaker of our panel, which is Mr. Amjad Abashar, Chief of UN Office for Disaster Risk Reduction, Regional Office for Africa, who will be speaking on live. So for your information, we'll have some intervention based on video and not for direct speak. So Mr. Amjad, are you ready to take my question?
Yes, Omar, how are you?
Good morning, Mr. Amjad. Welcome. Nice to see you.
It's a pleasure. Thank you.
Thank you. Thank you very much. So based on your experience, Mr. Amjad, and the COVID-related issue you are facing and whatever you've been doing, can you give us some option of ensuring that climate disaster risk finance and insurance deliver for people living in poverty and for vulnerable systems? So we know that we have limited public funds, how to strike the balance between different needs. And those are some questions we want to hear from you. Over to you. You have 15 minutes.
Okay, thank you very much, Omar, and also a very warm thank you to all the organizers for giving me the opportunity to speak on behalf of UN Office for Disaster Risk Reduction on the issue of disaster risk and disaster risk financing, climate risk financing. If I may begin, I just wanted to maybe just put things in context, and I'm going to focus on Africa. Last month was October 13th, the International Day for Disaster Risk Reduction, and we released, with the help, in cooperation with the Center for Research on Epidemiology of Disasters, CRED, we released the Human Cost of Disaster report that looked at the losses in terms of the disaster that we've had in the last 20 years, basically looking from 2008 to 2000 to 2019. Now, when we look at Africa, we see that the biggest type of disasters we usually face are usually floods and droughts. In the period of about 20 years that I mentioned, about 44 sub-Saharan countries were affected by floods, and they affected 27 million people who were affected by these hydrological hazards. And the economic losses from these alone were about $3 billion. And the same vein, drought is also a very big problem in Africa. Over the last 20 years, we've had 56 droughts across Africa with 122 million people affected. Now, having said that, these are actually conservative figures because the number of drought disasters that occur in Africa are often unrecorded, and it's up to the member states and the countries themselves to really develop a good disaster loss database system to be able to record this historical loss, to inform their investments and really get a good understanding of their disaster risks. Now, to your question, I think we've known for a long time that the communities that are most affected are often the impoverished, are the most vulnerable to disasters, and they require significant investments in risk reduction from the public sector and risk transfer instruments such as insurance to build their resilience. Resilience is also, it's comprehensive. It has to be a collective approach that's designed to include all the different segments of the population and ensuring that no one is left behind. So reducing the impacts of disasters on the vulnerable populations, including the poor, is really important. So climate and disaster risk financing could play a very useful role when it's part of an approach that also includes risk reduction to strengthen social protection and benefiting from the real participation of civil society. Now, private insurance is rarely a suitable option for the poorest because insurance schemes for them are unlikely to be sustainable without significant public subsidies. Poor communities, they tend to face many risks and receive little income and have few assets to insure and face many distributional issues from policy issuance to financial transactions. So public investment in disaster risk reduction programs, early warning, early action, and in social protection is critical to increasing the preparedness of those communities. So to reduce the risks of these communities and create an enabling environment for more sustainable insurance schemes, we must adequately also invest in the structural and non-structural risk reduction measures. Insurance as a component of risk transfer could play a supporting role of a carefully designed resilience building program, considering the limitations that include the risk of worsening income and gender inequalities. So the evidence we have suggests that insurance contributes to resilience building by spreading risks, providing faster and more efficient recovery, and offering certainty about post-disaster support and helping to reduce immediate welfare losses.
Thank you. Mr. Amjad, let's go further. You raise a very important question on the magnitude of the need on issues, because you talk about 44 African countries, 20 million people and 3 billion people. And while we are facing a limited public resources, of course, we need to do some arbitration, If you decide to invest, less, it means plus for others. So this becomes even more relevant as insurance schemes for DRR climate are likely to require public subsidies for the long term and possibility for indefinitely. Can you comment on that? What is your take on this, on this need for finding, a balance of resource, allocation, building on this code? Yeah.
Thank you. I think there are two important issues here. One is the limited public finance for government and communities, and the other is the need for insurance subsidies to encourage dissemination to the most vulnerable population. So financing is one of the main challenges for local authorities to implement disaster risk reduction and resilience building actions. So financial constraints have often been cited as the main barrier to undertaking disaster risk reduction and actions, and to mainstream them into development planning. However, evidence has shown that disaster risk reduction investments that lead to an increase in long-term resilience can avoid disasters that hamper development gains. So the direct and indirect impacts of disaster, whether they are due to recurring stresses or shocks, can have adverse effects on sustainable development. So many times, years and generations of developments, decades of developments can be wiped out due to disasters. So if we use insurance and risk transfer solutions are very context specific. They have to be context specific, and their effectiveness depends on a number of conditions. For example, on the supply sides, issues such as risk characteristics, lack of data to accurately price risk, a lack of technical capacity, moral hazards, things of that sort, and high operational costs can create barriers to implementation of risk insurance schemes. On the demand side, challenges to uptake have been linked to a lack of financial literacy. So the impoverished people sometimes have low trust on insurance products and a limited willingness and ability to pay and afford premiums. So depending on the context of insurance and risk transfer tools, they need to be regulated and subsidized in different ways, by maybe the public or by donors, by public authorities or donors, in order to create the required incentives for both demand and supply side to overcome such those market failures.
Thank you. And my last question to you, Mr. Amja, I mean, if you learn from this COVID-19, the demand is huge. I mean, not only financially speaking, but also in terms of innovation, because people are looking now a new business model on the way that we are approaching this disaster. What way forward you do recommend to complement a strong, commitment to learning, ensuring that results from investment swiftly find their way into program development for resilience? It's more about, what way we can just, streamline this innovation moving forward. Yeah.
Well, I think there are, two things, and I think we need to get the basics right. One of the challenges we face in approaching disaster risk reduction really revolve around two areas. One of them is risk knowledge, and the other one is risk governance. I think it's critically important to understand the risk that we face. And as I said in the beginning of my intervention, the risks that we face in Africa are not well documented in terms of historical losses in the past, and therefore it does not allow us to effectively implement develop risk-informed programs. So that's number one. And what comes with risk knowledge is our ability. There are some tools that we have out there in terms of risk profiling, probabilistic risk profiling, which allow you to sort of predict the losses and where those losses will occur at the national and sub-national district level, and also overlay that with the populations and vulnerability, which allows you to predict the losses that may occur from today and up to 50 years to 100 years in the future. So this is an important tool that we could use to be able to inform where our investments could be. But that would not work without having, a good coordinated governance system where disaster risk reduction is situated in a particular in an executive sort of authority or executive ministry, a prime minister's office, a president's office, that allows it with the authority, gives it the authority and the convening power to bring all the various sectors together. Because I said in the beginning, it's a multi-sectoral, multidisciplinary approach to disaster risk reduction that needs to be taken. And so I think basically in conclusion, the risk knowledge and the governance, risk governance are critically important to refine and to be able to inform investments as we go to the future.
Thank you very much, Mr. Amja. What I like on your point, so we see that the issue is not just about money. We need to look at other parameters. That's where you talk about multi-sectorial and multi-integrated approach, we can say. And I think this social dimension is very important. And that's why I think, beyond the finance, we need to look at as well the social engineering, where community have a say and engagement as well with the recovery phase or even the early warning system. And that's what you call even this governance aspect and knowledge aspect that need to go together. I think this is a very strong takeaway in addition to them, and that we need to have in mind. It's not just about dollar, but it's about mindset and getting people, the right people in the room as well in terms of direction and inspiring. So don't forget that you're going to have to wrap up this meeting. I did not mention at the beginning, but your thought is well appreciated. And let's move now to the second speakers. I think this time we'll listen a video from Miss Mia Tom, who is the technical director for Senfree. I mean, it's a pre-recording, so we have 12 minutes to listen from her. So, Regis, if you're ready, please pass the video. The question is, yes, on the screen, despite the potential, there's little evidence that insurance incentivizes risk reduction, and there's mixed evidence on adaptation. Is enthusiasm for insurance skewing effort and diverting investment from better established and proven intervention that would probably make a better job of reducing the risk faced by the world urban area? We listen now the response from Ms. Mia on this particular question. Over to you.
I think insurance is definitely not going to solve urban risk reduction on its own. So the starting point for me is less a question of whether insurance is the perfect solution and more a question of what is the role that insurance can play, and actually a question before that I think is very significant. How do we think about managing risk? Because in the end, we probably need a multitude of layers of financial service instruments, but also different actors that are playing non-financial sector roles to help manage risk and reduce risk. So I think in this space, there's still, it's very early days for the role of insurance and to be honest, the role of certain types of risk management in general. And if we look at developing countries, then insurance is really still in very early stages. In a lot of instances, we only have insurance penetration of less than 5% of people that have any kind of cover. And we also have very few public assets being covered by insurance. So I think we need to evolve the role of insurance, but even before that, we need to properly understand how to manage risk and what the different demand and supply side factors is around that. I think something that is still very poorly understood in developed countries, not just in developing countries, is the level of risk exposure that we face, especially with climate change and historical risks changing in terms of how they emanate and the impact that they've got and the losses that people are going to suffer in the future. So I think we really need to start with that question of what is our risk exposure and make sure that we properly understand that, and that we have conversations across society, including with insurers, around how to manage those risks, because it's not good enough anymore to have some insurance product that's sold for a particular type of risk. It needs to be far more integrated how we think about managing risk. And I think there's significant potential for insurance to play that role, but I think that has to be a conversation that's had between multiple sectors of society, as well as with underwriters. So of course there are low-hanging opportunities in the insurance space, but if we wanted to really be impactful for risk reduction, I think we need to spend enough time understanding the risk exposure and who is actually faced with the losses and how they can go about better managing the risk. We want to see true risk reduction. So in short, I think insurance has an important role to play, but it's definitely not going to be a silver bullet solving risk reduction on its own.
So this is the second question asked to Ms. Mia. Well over 100 disaster insurance schemes targeting low-income population have been set up around the world. Yet remarkably few evaluations have considered the impact. It could be well argued that this program target on quantity without any equal clear focus on quality. Can you comment on this? Next, please.
So I think that's such an important point, because in the end, the investment that we've got from all sectors of society, including humanitarian and developmental, kind of follows what you can measure. And I think you're completely right. I think in most cases, the current focus is around indicators such as how many people are covered, how many people have insurance policies, what are the kind of claims payouts that exist, how many countries are covered. So there are more quantitative indicators that focus on volume. And it's actually very difficult to measure the impact that those policies have. But I do think it's important to do that, because if we're talking about questions like risk reduction, that's not just a question of how many people have a policy. It's a question of to which extent have their risk exposure changed. And I think with insurance, it's not even just a question of risk reduction. It's also a question of productive risk taking. Can you actually invest and take risk to improve your circumstances? Such an important factor in our continent, and also very important if one wants to rebuild after catastrophes. So I think the question of how do we measure the quality, as you say, of the kind of schemes that we're targeting is a really significant one. It's very difficult to do, because even if you can measure the type of payouts that people get, it's difficult to prove that that actually improves their circumstances. It's also difficult to look at the opportunity cost between the premiums you pay versus the alternatives that you could have invested, or the alternative use that you could have had for that premium. So, for example, paying for a life or a catastrophe policy, is that better use than investing in education? But I think the fact that we can't fully measure impact doesn't mean that we shouldn't invest more in understanding the role and creating targets that are relevant for risk reduction and risk management. I think there's a lot of additional approaches that we could take to look both at demand and supply, but also to get a little bit closer to impact, to truly understand whether we are actually able to contribute to resilience of people with some kind of insurance product. And I think, again, it speaks to the question of, what is the risk need and what is our understanding of how to measure that risk? What are the demand side constraints and can insurance contribute to those? And then also on the supply side, what are some of those constraints? And I think underlying a lot of these challenges is data and modeling. And I think that's just an issue, not just in terms of the insurance design, but also for people that are buying the insurance to understand their risk exposure, especially if we're starting to look at government level or big private sector exposure to risk losses, to try and understand the investment they should make in insurance. Because I think if we're thinking about true risk reduction, and improved risk management, then it's not just going to be individuals that need to take up more insurance. It's also going to be the whole value chain of how risk is managed and how we think about resilience as a target for society that we need to get better at. Just focusing on economic growth isn't good enough. We definitely need to find other targets to focus on. And I think understanding how to measure risk reduction is going to be critical for those kind of policy decisions, but it's also really critical in how we design and invest in a range of insurance schemes that are relevant for development. So I think that's a very important area to focus on, and definitely not something that we've yet got right.
Thank you very much. This is the last question for Ms. Mia. I mean, basis risk is the difference between an insurance payout and actual losses, which is a key problem for index insurance, meaning that insurance schemes may not reduce financial risk at all. When considering the opportunity cost of the premiums, people or government could even be worse off. How would you respond to this perspective? Can you have the response, please?
So for those that aren't aware of what index cover is, typically it's basically where one pays a fixed amount when an event happens, rather than doing a full indemnification process around a claims assessment. So I think on the one hand, index cover has really opened the doors for millions of people to be covered that they wouldn't otherwise have had the opportunity to be covered, because there's just such a big benefit on the cost and business model perspective for distribution, and also for claims assessment related issues that have just constrained many people from not getting access to cover. So I think index cover is a really exciting new innovation. It's not that new, it's been around for some years, but to a large degree, it's still in the early days. There's definitely times where index cover is not appropriate. And I think you mentioned the financial risk where there could be a gap with basis cover. But I think the other issues that I'm also worried about is things like loss of trust, and also lack of financial planning, where people aren't able to fully plan around a guaranteed payout. Having said that, I think the reality is that you don't always have perfect solutions, and perfect solutions are typically not affordable. So I think the solution here is not to avoid index cover, but rather to improve it. And I think, again, as I mentioned for the previous couple of questions, the issue of data and measurement and modeling is very important here. Data is so scarce and of such poor quality in a lot of countries, and there's a lot of use cases for this kind of data, not just insurance underwriting. So I think we really need to think about how we can collect the right kind of data we need to improve this kind of product. How can we put together the market for data to collect this on a sustainable basis? Because I think there's a huge investment required that's really outside of the scope of any single business, and in many cases also beyond government. So I think the market for data here is really important for us to get index products of a good quality. Of course, there can be challenges with product design beyond data and modeling, but I think this is really an important factor that requires a lot of focus and collaborative structures for investment into this kind of product. So for me, the issue is not so much how do we avoid the kind of financial risk, but rather the bigger question of how do we improve the value that this kind of new innovation can offer to people, because there's such a big need for improved risk management and risk protection that we really need to leverage whichever new innovations we can to improve the role of insurance in development.
Thank you very much, Ms. Mia, for highlighting those challenges on defining, the financial risk. And I think we can see these challenges as well of measuring impact of risk exposure, as you mentioned it, but also measuring risk reduction as well. So, of course, we need to look at the data element and how we can come up with sound data at the country and different level. I think this is good, but also your recommendation of looking into this index cover as well. That's something worthwhile to explore. I think those are some takeaway from this conversation with Mia. So we need now to move to the next panelist, which is Mr. Leslie Ndologu, who is a CEO African Risk Capacity, who is on live this time. Mr. Leslie, are you online? Mr. Leslie?
Thank you very much, Mr. Siddharth. Good morning, good afternoon, good evening to everyone.
Thank you very much, Mrs. Leslie. We have 13 minutes. I have 2 questions for you. This is the first question I want to put on the table. Far greater investment is required in monitoring and evaluation for risk identification, impact, analysis on the factors that make access to insurance fair and for everyone, and in research on the alternative and opportunity cost involved. Can you comment on this assertion, please, to start this conversation?
Right. Thank you very much. I think the starting point of the conversation should really be the recognition that whatever gets measured gets done, and therefore monitoring and evaluating is extremely important to gather the data that's required to complete the feedback loop. I will share my experiences as the CEO of an insurance company, and just share how we use monitoring and evaluation to ensure that we are achieving the intended impact. The starting point is really having a robust data collection system, because our schemes tend to be at the national level, and they tend to have a great deal of donor financing on the one hand, usually for the payment of premiums, and also a great deal of public money, because we rely on the governments to pay the insurance premiums. As a result of this, there's a great deal of interest in understanding how the money has been spent whenever we have an insurance payout, and also being comfortable that it has reached the intended targets. So then we collect the data on the beneficiaries, understand how the funds have been spent, and we write a report that we then make, in fact, publicly available on our website as well. In terms of the product impact, we then look at how the product worked, how the claim payment was utilized versus what the country had in mind in the beginning in terms of their financial implementation plan. And this allows us then to tweak the product in terms of the attachment point, in terms of the level of coverage, in terms of the method of disbursement, because when you make the disbursement, you have a number of options that are available to you. You could either make cash payments to the intended beneficiaries, or you could have direct supply of food. So then we are able to evaluate which method is the most efficient. Recently, there's been an increased interest in the gender equality. So we are making some gender evaluation in terms of how we make the payouts, because oftentimes the households that are most vulnerable to natural disasters tend to be the households that are either women-headed or child-headed. So then we bring this component into it. And then the other important aspects that we cover through our monitoring and evaluation activities is related to storytelling, because behind every claim payment that we make, there are real families, people that are benefiting from all of this. And we want their story to be told and to come out, so that in fact, governments and other stakeholders can be more attuned to the specific needs of the community and the value of insurance in this regard. So I will stop here, and I'll be happy to take any additional questions either at this point or later on during the discussion.
Thank you very much, Leslie. I mean, for this initiative of your sector of really doing your best to cover, this need of insurance for disaster, especially on the monitoring. But at the same time, we can see some skepticism, of people about this insurance, knowing that this will not happen all the time. We are talking about, one every several years. What is the cost effective of that? And certainly as well, you talk about, rise in sea level and as gradual group of urban suffer from both from the slow certainty of climate change and from frequent disasters that strike every year or two. How we can turn, these challenges into an opportunity, and what is your guidance on that based on your previous experience?
Yeah, that is a really interesting question that you have asked, and I will build on some of the responses that Mia gave in her remarks. So maybe to use those as a starting point, I would say that I completely agree that insurance itself is not the magic bullet or an ultimate solution. Insurance works well as one of the various instruments that are available to the government and to communities. Since at the African Risk Capacity, we work primarily with governments, I will focus my response on how we work with governments. Really, when you think about the activities that the government needs to undertake in order to be in a position where they fully understand the disaster risk profile of the country, they need to do the really detailed studies in terms of their vulnerability to natural disasters. They need to develop a mitigation plan for all the natural disasters. And also they need to have a risk layering strategy where they are able to say that for the recurrent disasters, so for example, you could look at flood, or drought in a country, that happens every other year. Those type of disasters are usually best addressed through the normal budgetary process. If every year or every other year as a government, you know that you have to spend an extra $50 million or $100 million because there's a natural disaster that occurs, then you should be, as a matter of routine, be budgeting that money in your national budget. I understand that it is, of course, difficult to do consistently because governments are also cash constrained. And then the other way to address the disaster, as you have alluded to in your own remarks, is around mitigation. So drought can be addressed through better farming practices, more resilient seeds, better use of fertilizers. Floods can be addressed through increasing the resilience of the infrastructure, building better bridges, building spillways, dams, and so forth, so that you aim to reduce the frequency of the natural disasters. The second layer of any risk layering strategy revolves then around the creation of a contingency fund. So then these will be for the disasters that maybe are not as frequent, but happen every now and then. And the government could then systematically pay money into a fund which can be accessed in the case of natural disasters. And you see this type of funds in other areas in government, such as to fund road traffic accidents and other things of that nature. And then the third instrument you can think of is an instrument that's around contingent credit. So the government could then negotiate credits in advance with institutions such as the African Development Bank, the World Bank, the IMF, which is based on a specific trigger. So if you have a drought that's cost above a certain amount, then the funds are automatically dispersed. And then finally, you have insurance really coming at the top of the pyramid, because insurance works best for disasters that are very severe, but are less frequent. So then when you look at what I've just described, really insurance should not be used as the sole instrument as we often see nowadays in Africa, but it should be part of a cocktail of instruments that are available to a government. And as an insurer, one of the dilemmas that I face is that if you have an insurance product that pays very regularly, it somehow creates confidence from the point of view of the clients, because every few years they receive a payout. But the downside of that is that it is an extremely costly product, because then if you think about it in the most elementary terms, if you have an insurance product that pays every 2 years, it means that the premiums have to be at least 50% of the cost of a natural disaster. Then at that level of premium, it is an extremely expensive product. And as the speakers before me have indicated, then you will need to do a serious study in terms of whether you are better off setting the money aside in a fund or appropriating the money directly through the budgetary process and not using insurance. The other sort of value of insurance, maybe that doesn't come out in the numbers, is that for a country to be in a position to be able to take insurance, it needs to have done the work in terms of understanding its risk exposures. So insurance sometimes works as a catalyst to encourage a country to do the work required to understand its own risk profile. And then maybe the last point is that we use parametric insurance, which is the added advantage of a rapid speed of payout. And then this allows us to facilitate early intervention, because sometimes the insurance claim payment is the only money that the government has access to in order to start the emergency relief efforts and prevent the situation from getting worse. So I will stop here and I'm happy to take any additional questions. Thank you.
Thank you very much, Mrs. Leslie. Brilliant intervention. And I like the way, you stated strongly, insurance is not the magic bullet and the only source, for covering this matter. And also, I fully agree with you, the government has a role to play on that as well. That's why we need to look at the blending financing system as well in the particular area. But I fully agree. I mean, government should be able now to plan ahead and not wait, because it's something going to happen now frequently in many countries, how they can incorporate in their national budget to cover this cost and the gap. I think is a good point you raise. I really like this point you mentioned. Hopefully, participants will have some question for you. I see already in the chat some question coming, but we'll get there, after all the speaker has already presented, their speech. So thank you very much. So without further ado, let's move to Mr. Gerard Yozit, from principal. He is a principal in Alliance Life. So is Mr. Gerard ready?
Yeah, good morning, Mr. Silla. Good morning, everybody. Thanks a lot here for making room for Alliance, having us here. Maybe I want to quickly introduce myself and the broader Alliance. Alliance, as a commercial insurer, of course, has a large and important presence in Africa. Africa is one of the focus countries in the overall strategy of the group. Leaving that aside, I have to say that we are a commercial insurer, so we are largely actually focusing on B2B business, medium or larger enterprises being our target clients throughout the African countries. As the panelists already said, insurance is just one tool in the box of financing or insurance products. Solutions available are vast. The question is whether they are viable in terms of commercial standards for both the insurer and whether actually they can be afforded by the clients.
Thank you very much, Gerard. Exactly. I want you to really build on what you hear from Leslie, to expand further from your experience,
Yes.
Please proceed. Yeah, exactly.
Yes. So let me jump directly to the parametric solutions. Parametric solutions are a great product actually for, say, low frequency events where you have enough data actually to model the risk, and then come forward actually with a product which hinges on temperatures, precipitation levels, you name it. So the paras actually insurable under parametric solutions are rain levels, wind levels. That's to do with on or offshore wind farms operators. That's to do with temperatures, so heating degree days, for example, or Northern Europe, also snow. So it's always too much or too less. And the parametric cover actually would do the trick by actually indemnifying the client against these volatility from weather risks. A very important condition for that is to be able to quantify the weather risk and to be then to come forward with the solution. So when we talk about high frequency events, multiple events over larger stretches of time, we then would need to go structured. And let me explain that quickly, what I mean by the term structured. Structured means we also would utilize funds of our clients actually to be able to bear the risk. So we lend only a fraction of our balance sheet to the insureds, and the insured itself needs to finance a large part of the limits in these covers over term. That can be done pre-loss, can be done post-loss. We call these covers in general spread loss covers, as they allow us to spread losses over time by using the funds from our clients. These covers do have bespoke wordings, and they also allow for, say, profit commissions at the end of an insurance period. If the contractual balance says positive, meaning that the balance of premiums minus losses minus margins of the insurer actually is positive, there will be a large part of these funds being either transferred back to the clients or being used actually to endorse the cover and cancel and rewrite an insurance coverage. If that's not possible, then I think the general approach is for the client to avoid risk. If that's not possible, reduce risk. If that's not possible, manage it itself by its self-retention capabilities. That means the client itself needs to build up a certain fund over time to be able to manage short-term volatility. And if that's not possible, then yeah, we need to look at risk transfer possibilities, maybe with the help of government funding. Back to you, Mr. Sila.
Yeah, thank you very much. I was unmuting my camera. So, in addition to that as well, can you just circle back to the monitoring evaluation for risk identification and impact? And what can you add to what we hear already from Leslie, Mr. Leslie?
Yeah, I just only can stress the importance of, say, data gathering in the context of maybe governmental risk management programs, so that commercial insurers actually are able to structure solutions. If we don't have data, as Leslie said already, what doesn't get measured doesn't get done. It cannot get done, I would say, if we don't have data actually we can model upon.
Right. I think that's something we are hearing from different interventions, the issue of data, which is quite, some challenge that this risk, assessment and all this insurance process may be facing. I think it's good to reflect on that in the coming discussion and even further beyond this meeting. What does it mean and what is required to really fill this gap in terms of data to allow a good tracking of this risk, but also evaluation of this risk. Thank you very much, Mr. Khaira. I'm sure you'll get some question from the floor. So now we need to move to the next panelist, which is Lieutenant Colonel Fali Arichana Fabian Project from the Office of the Disaster in Madagascar. So at the beginning, yes, you were saying, I'm not sure he will be able to present. Now who's gonna present, or we have him on the line? Please, can you confirm?
So it will be me, Sandrine.
Oh, Sandra, you're the one going to present for Mr. Colonel, the Colonel, huh?
Yes.
So you're going to speak English or French?
I'm going to speak English, yeah.
Okay, English. So, I mean, Sandrine, then welcome to this panel. So this is a question that we have for you. So we know that you have been following, the work on DRR in Madagascar, a very hazard-prone island. Can you tell us, about it and reflect and share some lesson, you can share with the panel members and others here present. Over to you, Sandrine.
Yes, thank you very much, Umar. Okay, so Lieutenant Colonel Fali is currently in the field with government authorities, managing the national emergency response to drought that is affecting 3 regions in Madagascar, in the south of Madagascar. He really apologizes to not be able to join us in last minute for this important Congress. So I will speak today on behalf of him. As said, I am Sandrine Andriette, a national project manager of a regional adaptation fund project of UN Habitat in Madagascar. So firstly, let me begin with a brief overview of Madagascar and the management of disaster risk management in the country. So due to its geographical position, Madagascar is very vulnerable to climatic shocks, with regularly caused severe droughts in the south, currently that is happening, and floods in the north of the country. Or as you know, agriculture is a pillar of the Malagasy economy. It remains very traditional, not very productive, very little mechanized, and is therefore one of the most vulnerable sectors affected by climate shocks, cyclones, drought, floods, etc. In order to better cope with the country's vulnerability to risk disasters, measures have been taken by the government since 2003 to strengthen national risk and disaster management mechanism. For this purpose, the recent Policy General of the State and the Plan of Emergence of Madagascar, which currently will be applied from this year to 2023, underline the importance of disaster risk management and its reduction through its strategic axis number 5, which is the valuation of natural capital and strengthening of resilience to disaster risk. Through elsewhere, Madagascar National Risk and Disaster Management Policy was adopted also in 2016. It defines the regulatory framework for disaster risk management and disaster risk reduction in the country. Well, one of the specific objectives of the national strategy for this risk and disaster management is to strengthen the technical, material, and financial capacity of institutions and stakeholders in managing the disaster and risk, in order to ensure real knowledge of major risks and vulnerabilities throughout the national territory. So the National Office Bureau for Risk and Disaster Management, which we call the BNGRC, where Lieutenant Colonel Fali, our panelist today, is the national coordinator of the projects related to emergency responses. So this bureau, BNGRC, should be the management, coordination, monitoring, and support body of all the disaster risk management, and its bureau is attached to the Ministry of Interior. BNGRC is therefore designated a permanent focal point for coordination of programs and activities relating to preparedness, prevention, disaster response, and reconstruction. To date, in a country where there are almost 6 months of preparation and 6 months post-emergency operation, the main role of BNGRC therefore remains the implementation and development of emergency operational plans based on resources and available capacities, and the management of the material resources necessary for interventions emergency. Created also in 2006, there is another body, the Cellule de Prévention and Management of Emergencies, which is affiliated to the Prime Minister. So the main mission of this cellule is to assist the First Minister in the conception, development, and updating of the national strategy in disaster and risk management. In carrying out its mission, this cellule CPGU is supposed to work in collaboration with the National Bureau BNGRC and the Prime Minister to respond to the emergency situations like COVID-19 and right now the drought in the south, as well as the technical bodies of ministries, NGOs, and also international organizations working in risk management and disasters. With regard to non-institutional partners, several development agencies and international organizations intervene in Madagascar, mainly through financial and technical support for some disaster risk reduction projects, and also that providing food. So the World Bank, UNDP, OCHA, UNICEF, UN Habitat, FAO, WFP are among all the most active stakeholders in the country, with sometimes large budgets, and collaborate closely with the BNGRC and the government then for disaster risk reduction and disaster risk management. Several national and international NGOs also intervene informally in the area of disaster risk reduction at different levels. They really try, in particular, to promote a multi-sectoral approach and ensure a link between prevention, mitigation, and adaptation to climate change. Really, Madagascar's disaster risk reduction funding mechanism is not yet sufficient developed. As is often the case, therefore, there is no government budget allocated specifically to disaster risk reduction. Much of the reduction activities disaster risk depend then essentially on external support, given the weak national financial capacity at present. However, some actors responsible for disaster risk management and disaster risk reduction are sometimes endowed with budgets relatively large, for example, the BNGRC, although largely insufficient to satisfy existing needs. There are also other funds to contribute to disaster risk reduction, such as the Development Intervention Fund, FID, which include, for example, a component for specific rehabilitation and reconstruction, but it will involve the decision on using this fund, will involve the cellule CPGU affiliated to the Prime Minister, and will take into account the number of population in the affected area. Now there are some current projects in disaster risk management that are funded by World Bank, French Agency Fund for Development, AFD, and recently we have also the UN Habitat Regional Project on building urban climate resilience in Southeastern Africa that is funded by Adaptation Fund. So this project will develop and strengthen the national capacity in managing the disasters and risk related to climate change, and will establish conditions to adapt to the adverse effects of climate change. To conclude, financing the disaster risk reduction in Madagascar is still very challenging, given the urgent and essential waiting for aid in disasters particularly, and mostly sometimes in areas that are really difficult to access. So on behalf of Lieutenant Colonel Fali of National Bureau BNGRC, I thank you very much for your attention. Thank you so much.
Thank you so much, Sandrine, for bringing this institutional perspective from Madagascar. It's quite very inspiring in terms of progress being made by this country, always facing, the issue of disaster. And I think that's the right things to do, making sure we have, right institution and right governance structure at the country level to manage this issue. So, capacity is key. And that's where I think this discussion is very important, through this local climate solution, how we can learn from each other to fill the gap in terms of capacity. Of course, finance is always an issue and will be an issue. So we need to look at, the best way of filling the gap in terms of knowledge and skills for countries to manage, their DRR in terms of prevention and early warning system. So for your information, colleague, I think, Madagascar benefited one of these biggest projects from this adaptation funds, to build the capacity, and they are part of the DIMSUR initiative as well, which is quite a number of things happening on this particular country. So I'm sure people will get back to you with some question, Sandrine. Without further ado, we'll move to Mr. Jörg Wilbrink, who is advisor in the IFRC on disaster risk reduction. Mr. Jörg, are you online?
Yes, thank you very much, Mr. Silla.
Nice seeing you, Mr. Jörg. How are you doing? Are you calling from Germany?
No, I'm calling from Pretoria in Southern Africa.
Oh, great. Okay, thanks for your time. So I have two questions for you, Jörg, building on the experience of IRC on this particular issue of DRR. So how can forecast-based financing help government and humanitarian actors to support communities in responding effectively to climate change? And how can it be effectively bring the response to the community level? I think this is an element of a nexus, development and humanitarian, but also, the need for communities. So can you respond to that, build on that? Thank you, Mr. Jörg.
Yeah, thank you very much for that question, Mr. Silla. Just to give you a short overview, what forecast-based financing is and how it came to life in the Red Cross and Red Crescent movement. So this is something the humanitarian world has been dealing with this rise in humanitarian and natural hazards, let's say, the increasing in their magnitude, but also in frequency, and more there is a need to have a shift in reacting to these events, to these extreme climate shocks, rather than reacting to them, having a anticipatory approach to them. So really, this forecast-based financing is been integrated in the Red Cross movement in what we call a forecast-based action financing mechanism. And this really supports the forecast-based financing approach. So there is a rise in climate change has an extreme effect on these weather events and these weather shocks. We've heard the figures now before. What I want to talk about is really in parallel of that happening, weather forecasting and data availability, and also the technical innovations that have been ongoing in the last decade. We see that we are more able and more reliably able to predict these weather events, not only that they're going to happen, but also what type of impact these weather events can cause. And this is really what it boils down to in forecast-based financing. So it's a humanitarian funding mechanism for early actions based on in-depth risk analysis and forecasting. So what does that mean? What do we actually do? So this forecast-based action funding mechanism that I spoke about, it releases financing straight to a national Red Cross national society who has developed what we call an early action protocol. And an early action protocol is not a Red Cross product by design. It is designed to have a national context in mind. So for example, when we talk about Africa, what is happening? We have floods happening, droughts, cyclones, and cyclone season is coming up for Mozambique. So we've been incredibly busy with that financing mechanism. But if we look at Zambia, for example, the early action protocol includes the trigger. So when are these finances needed? When do we release them? This is a combination of an in-depth risk analysis. So we talked about this, previous speakers mentioned data availability. I believe that this financing mechanism really supports as well the creation of new data sets and availability bringing available these open data sets as well, and being able to use them on combining them, not only to see where the at-risk communities are, but also combining them with historical impact data sets. What did a previous cyclone, what did a previous flood do in a vulnerable community? So that is all taken into account, combining with the forecasting mechanisms with the Hydrometeorological Institute in the country or global models, looking at what will a future event do in a certain at-risk or vulnerable to these climate shocks communities. So that is a trigger that is written down in the early action protocol. And this brings me to what do we actually contribute in these communities? We have these early actions, which is also part of this protocol that is set up with different national stakeholders. So I can mention disaster management authorities, as well as these hydrometeorological institutes, as well as different actors, WFP, FAO, and Red Cross national societies and the Federation. These early actions can be, for example, cash distributions, when, for example, in a flood situation, normally smallholder farmers or livestock owners need to sell off their livestock on the worst possible moment. They can be buffered by this financing if it arrives on time, to make sure they don't sell their cows, for example, for half the price that they would normally have, and they would be able to reassure their also their income and also their nutritional intake for that coming period. So this is one example, but also for just to protect vulnerable infrastructure, protect vulnerable houses, vulnerable community members of these floods, and also just to be able to evacuate when worse comes to worse with the small financing that they then have available with these early actions. So that is practically from funding to early actions. So you have an early action protocol in place, the trigger has been reached. So let's say the trigger is 10% of all the houses will be destroyed in one of the particular communities that we've been looking at. Then automatically this financing, this funding is dispersed to that community level in this form of cash voucher assistance or otherwise early actions that have been designed specifically with all the national context stakeholders to be effective for that particular area. So in conclusion, in summary, I think just to answer that question one more time, in bullet points, these climate change, climate change really causes more of these devastating events. The frequency is going incredibly. The Red Cross really believes with these new innovative solutions, with the availability of these forecasts, we're not only mandated now to relieve human suffering when it occurs, but also relieve human suffering when it is forecasted or when we anticipate that it's going to come. And that is concretely done through this practical early warning, early actions. Sorry, over to you.
Thank you very much, York. I mean, this point of forecast-based action financing mechanism, which is an innovation, you know, as an instrument for forecast and anticipating on this early warning action is very important. So let me deviate a bit. How do you, something we didn't hear a lot, I mean, how do you address the gender issues on this, you know, mechanism, financial mechanism established?
Sorry, pardon, can you repeat that question?
How you do address the gender issues, you know, on this financial mechanism established?
Gender issues?
Yes, exactly.
Okay, so I was not.
I know, I didn't get from the right question. Just curious to know.
Okay, so for example, in the distribution of these early actions, it is particularly also taken into consideration in, for example, the design of how these messages are distributed to communities. For example, We look at human-centered design, really with the communities to look at how messages are received, also by different members of the community, by different vulnerable groups, let's say female-headed households versus child-headed households. So it's really a wider design process if you look at how practically these early warning messages, but also early actions are distributed. Also taking into consideration, really having that distribution of gender taking into consideration within the risk analysis that we do. So if you look, for example, at the way we look at coping capacity, exposure to these hazards, but generally building those risk models, building these risk indexes also within the Red Cross, particularly gender, are split in these analysis, also to see how to design these early actions.
Thank you very much. Yeah, I'm satisfied with your response, despite it was improvised from my end. Really thank you, and I thank all the other panelists as well for this brilliant intervention on the issue of insurance for DRR. I mean, we hear a lot, on these data issues, on this social engineering, but also looking into different mechanisms that has been established. But something we need to bear in mind: insurance is not the only magic bullet and the sole response to that. We need to look at the blending model. So, without further ado, let me call upon to Amjad Abashar, because I hear there is no more question. All the questions have been responded on the chat. So then, as we are still in the framing of our timeline, so let's give the floor to Mr. Amjad Abashar to wrap up this discussion and give us some takeaway for the way forward. Mr. Amjad, are you here?
Yes. Thank you, Omar. I appreciate it.
Nice to get you back again.
Yeah.
Over to you.
Look, I think you've sort of did a good job in summarizing each speaker's interventions in a very good way. So, and it's unfair for me to be able to really bring them all together because they were so rich. But I think there are a couple of messages that I wanted to go quickly through. I think the issue of data is just very, very clearly came out, and I think that's linked to the bigger picture of importance of having risk knowledge, in different ways, from different aspects, very sophisticated aspects in terms of risk profiling, and to help inform insurance payouts, if I could say that. But at the same time, I think it was very clear that insurance, is not the panacea for everything. You've used the word magic bullet. It's really has to be taken or addressed within a comprehensive approach. And I think what I want to emphasize here is the Sendai Framework for Disaster Risk Reduction has talked about systemic risk. And this issue of systemic risk in light of COVID-19 has come to the fore, and it's very, very important to look at. By that, it's defined as cascading risks, and it is illustrated by the way risks come together to cause a disaster, risks and hazards come together to cause a disaster. It's about, it also includes faulty development and things of that sort. So it's important to look within. Insurance is just part of that equation and puzzle that we need to address to help us address the root causes of risk and understand exposure and so on. There was also an important discussion. I thought some messages that were important that I wanted to emphasize. We talked about the comprehensive approach. We must complement existing efforts that are on the ground, build on the current gain, and keep in mind some of the emerging risks that come out in disasters. The issue of early warning and the link of early warning system and impact-based early warning, which is very important, because if you have early warning without the ability to communicate that information to the communities that need to take action, it'll be very difficult to to have an impact and save lives and economic losses. We must invest in stakeholders. There are different sectors that need to be engaged, and all these has to be led by a good risk governance that leaves no one behind. And so, in other words, governance has to be strengthened at all levels. I think the last thing, and I wanted to mention and reiterate, is the importance of, I think IFRC mentioned the forecast-based financing, which was very important. And I think the weather forecasting he mentioned were important to help us predict the impact and also to do the payouts. So that's very important. Historical data, and again, I'm sorry to talk about data, but understanding where we were to know where we're going is very important. We need to know what disasters have done in the past, who they have affected, which areas, which structures, and to help us build a good development, risk-informed development plan in the future. But I will stop there, Omar, and thank you very much for the opportunity to speak here. But I wanted, before I do that, I just wanted to draw the attention of the next sessions. I'm asked to do that. I think today, right after this session, there'll be a session on showcasing urban and natural assets in Africa, which might be quite linked to the discussions we've had today. And on the 11th of November, I invite also colleagues to attendance participants to join at 1300 hours CAT time, when nature makes sense as in dollars and cents, understanding the economic value of nature. And on the same day in the afternoon at 3 p.m. CAT time, there's a session on investing in urban nature with a specific case of Dar es Salaam. So I just wanted to bring that to the attention of the colleagues that and the attendees and the participants, and encourage them to attend this session. I'm sure they'll be interesting. So I'll stop here and over to you, Omar. I cannot do justice to all the presentations, but these are some messages I wanted to share with you. Thank you very much.
I'm looking forward to seeing you physically, because we are crossing each other, I think, in the compound, but we never spoke together. But we'll have time, inshallah. And
Inshallah.
Really want to thank all the panelists. I think it was a brilliant session and very inspiring. And we look forward to solidifying this coalition and work together on various levels, ICLEI, UNDR, and UN Habitat and others. So let's strengthen this collaboration, and we look forward to the rest of the session and the Congress, and success to all. Thank you very much, Jess, for giving me this opportunity, and thank you for Frizina for making easy my work as well, for putting everything on the paper. Thank you very much. Back to you, Jess.
Thank you very much. And that concludes the first session of week 2. And again, I'd like to say thank you so much to Mr. Amar Salah for moderating, for Mr. Amjad for great closure, and for every single speaker and panelist and questions that came through. It's been great, and we hope to see you now at the lunch session, and then throughout the rest of the week for other